Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Mangalam Malu. It's a day of a lot of updates. The Midcap Index, though, is doing really well on Midcap Radar today. So we'll discuss that and a lot more. But a lot to talk about on the show today.
A lot to talk about on the show today. So let's start with all the top stories that we're tracking this afternoon for you. Stocks see a two-way swing on both mixed domestic and global cues. Even though the RBI's liquidity boost is seen as a welcome step, auto, metal and consumer durables eke out some gains, whereas IT, realty drag, mid-caps surge.
RBI defers a rate cut, keeping a prudent eye on global developments and the growth inflation dynamic, even as it marks up its inflation expectations for FY25 to 4.8% from 4.5% earlier. Economists, they are betting on a rate cut in Feb.
RBI cuts the cash reserve ratio for banks by 50 basis points, boosting liquidity in the banking system by about 1.16 lakh crore rupees. Bankers see deposit rates peaking out following this, but banks' margins will improve no more than 3 to 5 basis points.
RBI revises its GDP growth outlook for FY25 to 6.6% from 7.2% earlier, following the sharp dip in the second quarter, even as it remains hopeful of a correction in second half on the back of revival in cement, steel and power sectors.
The RBI raises the cap on collateral-free agri loans to about 2 lakh rupees from 1.6 lakh to account for the increase in the prices of agri inputs. This move is aimed at easing bank credit access to needy farmers.
Okay, those are the top headlines, and of course, RBI is dominating the mindset today because we've seen some big decisions come by as well. But the rate cut question, that continues to remain. The GDP growth forecast has been cut. Inflation forecast has been increased by the RBI. And it turns out to be a very choppy session. We did see that sharp recovery around 10:30 a.m. But after that, it's been very volatile for the markets. Nifty is absolutely flat with some negative bias. Mid-caps are outperforming, though now as we speak, it's come up from the highs. The small cap outperformance continues. That index is up around 0.9% as we speak. And it's been outperforming the mid-caps also for most of the trading sessions in last couple of days. PSU banking index doing well. CPSE continues to do well. And a lot of individual names, which we'll speak about in just a bit.
Absolutely. You know, you're looking at the mid-caps doing extremely well. The last half an hour or so, the genre that the market was playing when it comes to music is metals, heavy metals. If you look at the Nifty metals index, you know, it was absolutely flat for most of today's trading session. Just the last half hour or so, there's been a big move up around 1.5%, led by Vedanta, Tata Steel, all the metal stocks and metal-related stocks as well. Case in point, something like a Rain Industries, which is up around 8%. And the other theme that continues to work well for the market is the recent F&O entrants. So if you look at, you know, the list of F&O entrants, in that the recent F&O numbers, we have Delivery, which has moved higher at the high point of trade. The other one is HFCL. So both Delivery and HFCL up anywhere between 4 to 6%. But that's not all. We have a lot of other mid-cap movers, for which we have Hormas to take us through the mid-cap movers.
Might be choppy for the benchmark indices, but the mid-cap index and the small-cap index are in a league of their own, as has been the case for a better part of this week. So we'll start off with the gainers then in the broader markets. And as Mangalam just highlighted, it is most of these new F&O entrants that are doing well, right? So the likes of ITI, HBL, Power Systems, MCX, Delivery, all of them seeing healthy gains of anywhere between 6 to even 16% now for ITI as we speak. All of them nearing or at the highest point of the day. Metals as a sector continues to do well. As Mangalam just mentioned, Vedanta is now also at the highest point of the day, 6.5% higher for Vedanta. Hindustan Copper, Hindustan Zinc, all of them seeing that sharp surge in the last half an hour of the trading session. Some of the other movers then within the broader markets, as the PSU space itself that is seeing a fourth day of gains now for the PSE index. IRFC, another new F&O entrant, 3.5% higher, and most of the other index constituents too seeing healthy gains in today's session. Stocks that are doing well on the back of volumes, and PB Fintech is one of them as well. But Asahi India, CESC, Blue Star at one point was up 7%, still holding on to 5% gains in today's session. And lastly, some of the underperformers that will come up on your screen, those are the ones that are not doing well today. HEG continues to decline at 4% down today, and Canfin Home, Signature Global, some of the real estate names too not having a good day today. Back to you guys.
Okay, all right. Thank you so much, Hormas, for joining in with all those details. It's a good time then to get a technical check on the markets. Himeen Kapadia is joining in now. Himeen, good afternoon. Thank you so much for joining in. Well, what's the next level to watch out for on the Nifty, and any individual names that you are betting on today?
Very good afternoon, Sonal. Thank you for having me on the show. A very, very happy birthday to CNBC on its 25th birthday. As far as Nifty is on, it was 24,492, 24,800. Now we're there. So 25,200 and 25,700. These are the next two levels coming in. Maybe there could be a small cool off, but I believe these levels are there on the horizon. It might not happen in a jiffy, but things are obviously looking much better now. Individual stocks of Sonal, buy call on escorts. One can buy escorts at around 35.20, stop loss 34.50, target of 36.60. Oversold, positive divergences, crossover buys. Second one is once again in the auto stock, auto pack. You can buy Maruti at 11,300. It's formed a base. It's forming a rounding bottom. Indicators have given a crossover buy again. One can buy it at 11,300. Stop loss 11,150. Target 11,600. So,
All right. So those are a couple of stocks. But what do you make of a bunch of these mid caps? And what would your index trade be? You said that things are looking good. Do you think this, consolidation around the flat line is a place for one to go long? If yes, then it's the Nifty or the Nifty Bank that you're talking about.
The Nifty Bank is stronger because the gap didn't get covered up, Mangalam. The Nifty Bank did. The Nifty did, Nifty Bank did. Relative strength coming in. But having said that, I believe Nifty can play catch up. So 24,800 will provide resistance. We've been up very sharply. So I'd wait for a small cool off to answer your question. Somewhere around 23 to 20, around 24,500 is the level I would look to go long, Mangalam, with a target for 25,200 for the month of December.
Okay, all right. Thank you so much, Amin, for joining in and taking us through your picks, and have a great weekend ahead. With that, we'll slip into a short break. On the other side, we get you excerpts of our conversation with Gunender Kapoor from Vishal Mega Mart. Welcome back. You're still tuned into Midcap Radar. This is our IPO KYC special. My colleague Reema Tendulkar spoke to Gunender Kapoor, who's the MD and CEO at Vishal Mega Mart, on their IPO, use of proceeds, and much more on the company. Listen in to a slice of that.
Firstly, the promoter stake is coming down from 98.77% to 76.02%. And I must say that they would continue to be the promoters and one of the large shareholders in the fullness of time too. They have a long-term commitment to the business. Now, as you know, we are largely private equity owned. So therefore, and our private equity investors have been invested now for over 6 years. And therefore, this is just a dilution of this stake and an effort to make it a publicly listed company.
PE companies have a fund life.
Sure.
So there is always a risk of further supply coming through. So what is the commitment from the Kedara group?
That's absolutely correct, Reema. And therefore, we've been very upfront with all the potential investors that Samayat will continue to be a promoter of the company. And the private equity investors have a long-term commitment to the business. They're very excited about the future of this business, and therefore there should not be any significant concern on that front at all.
So let's just talk about the near term, because off late we've seen some sort of consumption fatigue coming through, slowdown. So are you confident, at least in the near term, the next 12 months, that the numbers that we've seen so far, a 19% revenue growth in H1 or a 13-14% kind of same-store sales growth, will continue, say for the near term?
I'm seeing some pressure on consumption. We've seen that in the first half. And I would say that we've had to do more to get double-digit same-store sales growth. But we are confident about the future.
So, Gunender, we have your numbers for the last 3.5 years now.
Sure.
So margins are largely between 13 to 14% at the EBITDA level. Gross margins broadly around 28%. Has that been the long-term trajectory? And do you think over the longer term, minor fluctuations here and there, investors can expect this? kind of market?
Without being specific, I would say yes.
Okay.
I would say that our general view on gross margins is that we would maintain them at the same ballpark.
Okay.
And we may get growth on our EBITDA and PAT because of the operating leverage that we will enjoy. As you've seen historically, we grow at double-digit same-store sales growth. And if the cost inflation is around 5, 6, 7%, then we do benefit from it.
1 billion internet users, but yet your online presence is negligible in terms of revenues and profits. Why is that? And is that something you're looking to scale?
So we are largely an offline retailer,
Yes.
as you rightly said. We have in the recent years started a pilot, in fact last year, which we are rolling out at the moment to ensure that we are present in the quick commerce space in a relevant way. And this quick commerce platform is such that it operates within, let's say, 7 to 10 kilometers radius of each of our stores. And when you log into our app, you can you get automatically tagged to the closest Vishal store, and you can see the merchandise available in that store. And if you were to place an order, and if you would choose to, we could deliver to you within 2 hours. And if you were to buy more than 299 rupees, the delivery would be free.
Okay.
So we are quite encouraged by the early response. And we are now rolling out this quick commerce platform to other stores beyond the pilot. And as we speak, we are present now with our quick commerce platform in 375 odd cities in India. So yes, in a very relevant, capital efficient way, we will ensure that we bring to our customers the benefits of digital commerce.
So what are the revenues and profit numbers of your overall online presence and of quick commerce today?
It's still in a pilot stage, so I wouldn't quite go to the numbers. I would only say that it's shown.
But you're in 375 cities offering
It's
quick
just
commerce.
happening as we speak.
As we have.
Yeah.
Okay.
So it's.
And
just
what's the investment you've put in?
It's not significant because you would realize that there's no dark store there. It's only from our retail stores. And the inventory is fungible between the store and the...
So there will be no cash burn, as we see with other quick commerce
There would be
companies?
some to begin with, but very small.
Very small.
Yeah.
Okay. Enough to dent your margins as it scales
No,
up?
no.
You will make sure?
Yeah, at this moment, as you can see, it's not dented our margins.
So now let's talk about your store count addition. On an average, you've been increasing your store count by 10%, at least based on the data that we have. Today, you're present in 645 stores. What's the expansion plan?
So you're absolutely right. That's the pace at which we've expanded. Our experience with new store rollout has been very good. For example, I'll share just one data point with you. Our payback on capex, store capex, is 19 months, which to the best of my knowledge is the shortest in Indian retail. So that is very encouraging. And we are hoping to scale up a new store rollout to something like 80 to 100 stores per year now. But I must underline the fact that the goal is not only to open new stores, but it's to open new successful stores. Rima, at the moment, we are present in 30 states and union territories in India. We are present in 403 cities. When the erstwhile Vishal Retail was first acquired in March 2011, through the bank-run CDR process, it was indeed largely a North and East company. And in the earlier years, of course, the objective was to expand into North and East because our coverage was somewhat patchy at that point in time. And then we have ranked all the states in India based on the cost structure. And obviously, we are going from low cost to high cost. And as we speak right now, we are opening stores in Kerala. And after that, there would be essentially 3 states in India that we would be looking at for expansion, which are Tamil Nadu, Maharashtra, and Gujarat.
And this cash on the books of 700 crore rupees, how do you typically utilize it? How much goes in adding, say, 80 to 100 stores every year?
So a significant part of our cash will go into growth. So as I mentioned, it will be at least 30-40% of our cash will go into that. Then we, as I mentioned, the e-commerce pilot and so on, we are looking at several new initiatives.
Welcome back. Frontline indices meandering just beneath the flat line. The mid-cap index is where all the action is. And in that as well, while the conversation with the management of Vishal Mega Mart was going on, we did see a couple of stocks in the retail space spike itself. Maybe a bit of a valuation arbitrage playing out there. We have Bazaar-style retail, a recent IPO. That stock is up around 9%. The other one that is spiking also is Spencer's Retail. So just keep an eye out on these couple of stocks. And beyond that, we do have Tilak Nagar Industries, which continues to surge as well. So as soon as the price band of the Vishal Mega Mart IPO did come by, we did see an up move on these retail stocks, and Tilak Nagar Industries goes into Friday with a big cheers for all the shareholders. With that, we end this edition of Midcap Radar. Your stocks when we return.